Generational wealth shift is happening in history right now, and most investors, they're asleep. Millions of baby boomers are sitting on land, houses, commercial properties that they can't use, they don't want, and they can't sell the traditional way, and they need a monthly income, not just a one-time payday. This is a once-in-a-lifetime window to lock in seller finance deals with cash-on-cash returns that beat anything you can find in the market. And if you miss it, you will never see it again. Our guest today has been making these deals happen for years without partners, without splitting equity, and he's going to show you how to take the whole pie. Welcome to the Closers Club. Let's get into it. Brad, my friend, thank you so much for being here. So let's jump right into it. I see so many investors, they're really just missing the seller financing boom. I took advantage of it almost 15, 18 years ago. And I think a lot of people don't get into it because they don't understand it and they're not sure about the hassle. So what is the biggest misconception about seller financing that is keeping people out of this gold rush?
A lot of people don't think it's there.
Yeah.
They're looking on one side of the ship and they see
Mhm.
the ocean versus if
Yeah.
you look at the other side,
Mhm.
there's the opportunity.
There is so much opportunity right now. Yeah,
Yeah.
that was the thing for me is really we figured out seller financing just out of basic needs because we didn't have the cash or the credit to buy properties. So for me, it was really the only way to go. What got you interested in seller financing? Like how did you sort of get into that?
Sometimes in real estate, you do deals that don't work out. So you
Mhm.
start, figuring out what could you have done that would have been led to the opposite. So
Yeah.
my wife and I were on a road trip and we said, man, there's got to be something better.
Mhm.
And we realized, if we could recreate the opportunity of 2006, 7, and 8
Mhm.
again,
Yeah.
then we could just go to the moon. So for
Right.
us, there was a window of time where you had great opportunity to just get amazing deals
Mhm.
and the banks were still lending. But we
Right.
can't control the banks, but the baby boomers are aging out
Yeah.
property ownership. So
Mhm.
that's the opportunity right now.
Yeah, I think for me, and the difference is, I do think I believe you. I think it's a great opportunity. I think so many people just pass right by owner financing. But back in 2010, 11, 12, sellers couldn't sell because just the market had tanked so freaking bad. And on the other side, nobody was lending money to me, no matter how good my credit was. So that was why we found owner financing appealing. Now I think it's just a little bit different. I think there's just this huge glut of properties and businesses and things like that are going to come to the market because, as you said, the baby boomers are just aging out. So I think there's going to be just so much opportunity there.
When the opportunity is terms as low as 0%. I
Love that.
mean, you can't beat that. That's free
Mhm.
money.
Yeah.
And so, yeah, we're getting deals at 0 and 1% interest and
Wow.
not small deals, multi-million dollar deals.
Nice. Yeah, the biggest one I ever got was 1.1 million on a 17-year term at 4% interest. That was probably the best one that I ever did, which was great. And
There,
walked away from closing with $10,000.
right. And without giving like financial and legal advice,
Yeah.
there's a lot of good reasons that
Mhm.
this works for the seller and works
Sure.
for us, the buyer.
Yeah, that's what I would explain to people like, hey, if I give you this $100,000, again, not an accountant, didn't stay at a Holiday Inn last night, but you're probably going to pay at best $25,000, at worst $40,000 in taxes. But if you take it little by little, that tax bill will be greatly, greatly reduced. And, the question that I always had for people is, I would make them an offer and sometimes they would accept it. But if they didn't, I'd be like, well, man, I think we talked about this in Dallas the other day. Do you need all the money at once? And a lot of times they just don't. They don't even want all the money all at one time.
And if you really want to stick it, you can
Mhm.
say, how about the volatility in the stock market? Have you
Yeah,
lost any money in the market this year?
yeah.
And
Are you
most
are you are
have.
you confident that somebody's not going to send some wild tweet out that's not going to spiral the market down tomorrow?
Right. Like we're playing Russian roulette every single 100 times a day with,
Right.
one tweet or another.
Hmm.
What if you just had it steady? What if you
Yeah.
just locked it in?
Yeah.
And so we're finding it's a longer conversation. It's not a
Hmm.
1 day conversation, but you're getting amazing terms from the sellers
Hmm.
who oftentimes are debt free. They've had these properties for sometimes decades. A
Yeah.
lot of times they're debt free. For
Hmm.
one reason or another, it's not going to go to their heirs. So
Yeah.
show up, raise your hand.
Yeah, I think that's true. I don't think many people realize that. I've talked about it a lot, but most people still never. When I'm like at an event the other day where I was speaking, I'll ask the group the percentage of properties in the United States that are owned free and clear. Do you know? Do you know what the percentage is?
I'm guessing like 40%, but I
It's exactly 40%. Yes. Good
oh,
guess. Good
oh
guess. I very rarely ever get anybody who hits it right on the money. It stayed consistent between 38 and 42% nationwide for a decade. And that's shocking because all we ever hear is, oh, low interest rates, people aren't selling. Like we live in the bubble that we want to live in. But when you actually go out there and look at the data shows that these properties are owned free and clear. There's a tremendous amount of them. And even more with high equity. So yeah, so much opportunity out there. I think you're right that some of these people don't have any heirs. Maybe, they don't have kids to leave it to, or their kids don't want to be involved in it, which always sounds weird to me. But like, how many times have you come across that where they're like, yeah, my kids they don't want the laundromat. They don't want the storage units. They don't want to deal with it. Right. They just, of course, probably just want the money.
yeah, it's true. I grew up on a turkey farm, and I'm not a turkey
A
farmer.
turkey, you grew
So
up on a turkey farm? That's interesting.
yeah, yeah, we raised over 1 million turkeys, and
Yeah. I feel like you told
that's
me that
just not
before.
something I'm into.
Yeah. But somebody else is, right? Somebody else can come along
Right.
and yeah. I read an article that said graduates from Harvard Business School have been going out and instead of starting businesses, they've realized that they can buy these businesses that are existing and underperforming, and achieve success, I guess, at a much higher rate, much faster by doing that, by going out and looking at people who, just at the end, they've got a business, it's decent, maybe it's making a little bit of money, but they can bring their talents and marketing and business acumen and kind of come in there and just really boost those things up and really turn them into gold mines.
Well, and if the audience is taking notes, this is something
Mhm.
to write down. It's about
Yeah.
cash on cash.
Right.
It's not about the purchase price. It's not
Mhm.
even about the terms or the monthly. It's about the cash on cash. So if you
Right.
can figure out a little bit of math and get your
Mhm.
cash on cash right,
Yeah.
why build it from scratch? Why take the risk when it's already there?
Right. That was for me when I was buying all of my properties. I didn't really care that I was buying it even at 110% of ARV, right? Or 130% of the tax value. Did not matter. Was I going to make some cash flow? Right. And then everybody's situation when you're evaluating a deal like this, everybody's going to look at this different. You, me, and three other people, we're going to look at it 6 different ways because some of us have income from other areas. When I was buying these, I had wholesale income. So I wasn't necessarily dependent on the rental income. So for me, I was able to do it at 150, $200 a door 10 years ago, right? So maybe that's
Nice.
$300 to $400 a door today, where somebody else might be, I need $800 a door for this to be worth it. Yeah, because you have a full-time job and this is the only way that you're in investing. So everybody, I think you're exactly right. Everybody has to understand the numbers and, evaluate them from the point of view or the perspective that works for them.
And a lot of times the sellers look at the numbers very differently because
Hmm.
they're going to go hunt, fish, ride on
Hmm.
cruise ships for the rest of their life. So they're looking at how much money do I need to budget for the rest of my life. And so there are ways that you can help them get their number while
Yeah.
still getting a healthy return for yourself.
Yeah, imagine that. You need $3,000 a month to live on a cruise ship. So you get $4,000 a month in owner financing and you're out. You
Yeah.
just literally stay on a cruise ship for the rest of, for 20 years or 10 years or whatever it's going to be. That's your
And
retirement plan.
and that's the key here is
Hmm.
take a little bit of consideration of what they need is different than, you know, a cash transaction.
Yeah.
Especially if there's a broker involved, because 9 times out of 10, they've lived their whole life. They know someone who wants a
Hmm.
real estate commission. And you help that broker
Yeah.
understand what if we get this price as high as it can be, but
Hmm.
you're going to have to, your price, my terms, and dial these other things down so you get
Yeah.
a high commission.
Yeah.
And that's the way to get the brokers on board.
So, well, let's talk about that because I know you wanted to really talk about owner financing commercial properties. What is your preference for how to find these? Because that's going to be everybody's question, right? Are you doing some type of data pull or research and going directly to the seller or to the owner, the business owner? Or are you looking more to go through brokers? What have you found the most successful?
I like to start with the dumbest way possible. And if I
Okay.
can prove it works with the least amount of technology and subscriptions,
Yeah.
then you can get smart and sexy afterwards. So
Okay.
go to Google Maps, pick the county. For us, it's Tarrant County, Texas. Type
Okay.
in RV park, mobile home park, apartments. And Google Maps will give you
Hmm.
the phone number, the address, the
Hmm.
reviews, the
Oh,
website,
yeah.
plenty of things. And it's real time. It's not a recycled list from a broker.
Right, right.
And then you want to segregate if it's corporate owned versus mom and pop owned.
Gotcha.
You can often see that just depending on how sophisticated the website is. And
Yeah.
then if you do a county name search and
Mhm.
that same owner owns three in the same county, it's probably not mom and pop.
Right.
So we skip all the corporate. You're going to make your best money from someone who's going to retire versus they
Yeah.
never die.
Hmm. So, and you were personally looking for more like parks right now?
Yeah, I like things that don't have elevators or expensive AC units. So, boring rectangles, we call it. RV
Boring
parks, mobile home
rectangles.
parks, self storage,
Yeah.
IOS, small warehouses.
Yeah. Love it. Well, I live in a building with an elevator that, knock on wood, it hasn't been broken in a little bit, but we went through a period of about 8 months where felt like it was once a week the thing was going down. So I get that. And air conditioners, I replace a lot of air conditioners. I'm probably at least one a month. That's 5 or 6 grand. So I
Yeah.
get it. Nice.
Yep. Simple, boring is the way to go.
Hmm. So for you, Brad, are you looking for just stuff kind of local to where you're at? Are you looking nationwide? What are you searching for?
Well, I'm in Texas, so Texas is the best for me. But yeah, we find deals all over because once
Yeah.
you start getting referrals from all over.
Mhm.
So right now we have a contract on one in Wisconsin, another in
Really?
Georgia.
Oh, okay.
Yeah, it's just you just because everyone has moved around and has a
Mhm.
referral. So yeah,
Mhm.
Texas is where we're focused.
Yeah. Do you have like students? Or are you teaching, or is this just your network? Like, where are you getting all of that from?
You know, I don't have anything to sell.
Yeah.
So we have a team in the Philippines that does our data analytics. They'll
Nice.
build the list and scrape
Uh-huh.
for us, and then we just run campaigns. And so my
Really?
wife and I have a small fund, yeah,
Mhm.
and we're just building our cash on cash.
I love it. I love it. What have you
Yeah.
bought this year? What's your best property this year?
RV parks, that's the jam.
Mhm.
I'm wrong a lot about forecasts, right? So
Mhm.
I'm not saying I know the future, but I
Yeah.
feel like that's the absolute cheapest place someone can own the toilet that they squat on.
Yeah.
And in our economy, it could go up or down.
Yeah.
And RV parks work for both. If you're recreational RVing, it
Mhm.
works.
Yeah.
If that becomes your housing, it works. So
Mhm.
no matter what happens,
Mhm.
we're set for it.
Interesting. Okay. What are some of the challenges with the RV parks that you weren't expecting?
I didn't realize every park has their own culture, right? It's like Coke in a bottle and Coke in a can. They are
Really?
the same, but they're different.
Mhm.
So people who travel have a certain mentality. People who stay long term have a certain mentality, and
Gotcha.
there are pros and cons to each group of
Mhm.
what their needs are and what their expectations are of a park.
Mm.
So
How do you manage these? Do you have somebody that lives in the park there, or are you like hiring a property manager? Like, how does that even work?
usually there'll be a couple people. There's going to be the handiest person in the park who needs some beer money, and so they're quite affordable, and they cut the grass and take care of the hoses and hookups.
Mhm.
And then you want someone who's responsible with money and a little bit tech savvy who collects
Yeah.
the rent.
Okay.
Get as much of it as you can electronically,
Right.
but there will be people who they don't use banks, and you're going to have to deal with some cash.
Really? So you have this
Mhm.
person collects cash and deposits it, hopefully?
Yep. Yeah.
Mm.
You called it, hopefully.
Mhm. Well, I had a bookkeeper one time that we realized, over the course of a few months, stole like $6,000 in cash. That just, because people were coming into the office and paying cash. So that was kind of ugly for us. So yeah, I let the property manager do it all now.
Yeah. And yeah, distance yourself from it. Don't
Yeah.
live there. Visit when you're just feeling curious, but you're going to find things that you don't want to see.
Yeah.
Just be the investor,
Hmm.
not the manager.
Right. Right. No, I think that's true. Even I've had friends who do the house hacking thing or buy the duplex and live in one side. And I'm like, do not ever tell them that you're the owner. Tell them you're making the payment just like they are, because then they'll be knocking on your door all the time.
When I first started back in 2006, I would tell people that my mother-in-law was the owner,
Mm.
and I'm on their
Mother-in-laws are
side.
the worst, right?
Right. I love
I
the
hate her
loudness.
too.
I think it's great that you park on the lawn. I think that's the best way to put your car.
Yeah.
But if one of us is going to be out in the street, so you either need to rein it in
Hmm.
or we got problems.
Yeah. Yeah. Yeah, mother-in-law. That's great. I didn't think of that. Um, so where do you feel like I know you said you don't want to be predicting the market, but where do you feel like things are going?
I think there's turbulence in the market, whether
Yeah,
you're talking stock market, real estate,
yeah,
finance. I
hmm,
think it's anyone's guess, but
yeah,
volatility is something that people have a hard time pricing in.
hmm,
But if there's a lot of volatility, you want to move towards safe quality assets.
right,
That's my thinking. So no matter what, if it goes up or down, I think people are going to move to the safest place they can
hmm,
with their resources.
right.
So
Yeah, I agree with that. That was always my perspective is I don't really know a lot about stocks and I mean I can go by Apple stock, right? But I don't know what Tim Cook is doing in the I don't want to say a corner office because it's a round building, but wherever his office is, right? I don't know what decisions they are making, right? With tariffs and all of these things. I can't control that, but property, right? A house, right? I can touch it, feel it, lick it, push it, feel it, crawl underneath it, whatever, right? Like I have control of that. I can put new paint on it. I can cut the grass. I can do all those things. So yeah, I just feel much more in control with real estate and real estate is something people need. They don't necessarily have to have the new iPhone.
exactly. Yep. I think there's going to be more and more people that move towards safety,
Mhm.
whether that's affordable housing, whether
Mm,
it's better quality housing.
mhm.
I would expect that that's where everyone's going to move. Which
Right.
industries boom and bust? It's anyone's guess.
Yeah.
We're in a weird timeline.
Yeah. So, were you telling me the other day, I think it was you, like how many people are retiring, like literally every week or every year or something? Like it was a huge
It's
number.
insane. Yeah, you have, and it's a tricky target, but yeah, you have tens of millions of baby boomers that are on their last lap of the track, some of the
Yeah.
last turn on the track, and you have
Man, I'm not that old and I
multi
feel like I'm on the
trillions.
last lap sometimes. So I can't imagine what it'll be another 20 years.
Yeah, just keep taking care of yourself. But
Yeah.
it's trillions. It's many trillions of dollars worth of assets, and it's
Mhm,
tricky to know because sometimes there's private debt and corporate bonds and things like
mhm.
that. But it's it's more than $12 trillion that's going to move because you can't stop
Yeah.
time, right? These people will not live forever,
Right.
and those assets, you either caught it while it was
Mhm,
gettable, you're not going to
mhm.
get their signature after they died, or
Yeah.
you missed it. Like
Right.
that's why this is a window of opportunity.
Yeah, and I think, we have an opportunity when we approach these business owners, the people who own the laundromat, right? Like they're either going to sell it or just shut it down, right? Like those are the
Hmm.
options. That's it. Um, and if they don't have anybody else that wants to buy it, and there's, maybe you've looked at this because you mentioned brokers, uh, like there's so many businesses out there for sale. And I think people do probably initially, price them with this pie in the sky number, but at some point, my God, they just got to get out of it. They want to they're just done. Because I think once somebody makes a decision to list their property, I think probably mentally they're like, I'm fucking done. I've had enough. And the longer it goes, the worse it gets.
Yeah, and you've mentioned this in other interviews, but this is the quick crash course in the negotiation. You
Yeah.
show them how all cash doesn't work, right? I'm making a
Mhm.
4% return. I could just
Yeah.
do a high savings account
Mhm.
or an annuity and make 8, 6 or 8%.
Yeah.
Okay, so that doesn't work. And then you show them how DSCR loan won't work at
Mhm.
their price point because it's
Yeah.
8% and 25%
Mhm.
down. And you say, "Ah, I'm still not there." But what we could do is, how about a 10% down and 0%? I'm still giving you your full retail price, your
Mhm.
best price in the market could ever dream of.
Ever.
And we'll balloon it in
Mhm.
5 or 10 years,
Yeah.
when I could qualify for a DSCR.
Yeah.
And that works. It
Really.
works. It works. It works.
Hmm. And you like doing the balloon? I hate balloons, man. I've done a few of them at 5 years, and that 5 years pops up so quick. Like every time I'm like, it's been 5 years already. Damn. Damn.
Well, that's the place to start the
Mhm,
conversation so that they're not worried about the amortization. And watch the
mhm.
language. They don't know the language. So
No.
use
No.
terms like payoff instead of balloon.
Right.
Instead of amortization, just say adjustment to the monthly payment.
Mhm, mhm.
And that's going to help them. Otherwise, they get confused and you'll never get the deal.
Yeah, I've always said that, right? Don't try to tell people how smart you are. Don't show them that you're so clever because you're talking inside baseball terms, right? Like they don't ever understand amortization, sub two, novation, like blah, 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 blah. You're going to confuse them and they're going to say yes, but on the inside they're crawling up in the fetal position. They're like, I just want to sell my fucking property, man. I don't know about all that shit, and that's how people ghost you. And they're like, they don't want to deal with you because they don't understand and they feel stupid.
Exactly. And everything's negotiable.
Yeah.
Even if you start with five, say, we can do five, or if it's going so well at five, we
Mhm.
can do an extension for another five. There's a deal to be made. You just have to start the conversation.
Yeah. No, I agree. And I think people are afraid to make that conversation. I remember, like, even me, I was like, you're trying to figure out what to say. And for me, the process that I went through with making these offers was very, hey, Brad, you want 100,000? Oh man, I get it. Cash, I want to pay cash for this house, whatever. Here's my cash price. It's 62,000. Oh, that doesn't work. Oh, okay. Um, hmm, a little delay there. Well, man, really want to buy it with cash. Ask you a question. Do you need all the money at once, right? It'd be like the first time I've ever thought about it, right? Hmm. And then, sometimes they'll say yes, sometimes they'll say no. But like we talked about last week, the best closers in the country, right? RJ Bates and Eric Klein and all these people, they'll close 1 out of 10 people. Well, what the fuck are you doing with the other 9? Right? We're just taking another shot, another bite at the apple, those 9.
It's exactly that. And once they understand, they're getting what they want, which is
Yeah.
security for the remainder of their years.
Yeah.
That's all they want. The
Mhm.
specifics don't matter after that.
Yeah. Yeah. And then, these are very easy deals to set up. I'll plug our company, Easy REI Closings. If you want, someone to help you structure these deals, we do this kind of stuff all the time. It's very, very simple stuff. But yeah, that way that the seller's protected, you're protected, the paperwork is right. Nobody can snatch the property away from you after you've made a bunch of payments. So I think owner financing is amazing. I think, everybody should be doing it. It's the easiest way to buy properties. And so many of the people that we're going to buy these properties from, a lot of them bought with owner financing and they have experience doing it. So
Yep.
it's good
Yep.
stuff.
I think that's the biggest window of wealth transfer coming up. And
Mhm.
it's elementary if you just reach out there and start the conversation.
Yeah. All right. So, Brad, let's wrap it up. I know I actually kept you a little bit long here today, but this is good conversation. If you had to go out and find a deal that you wanted to sell or finance today, right, or in the next 7 days, and you would lose your bulldog, right? What exact steps would you take, kind of day by day, to get this deal and get it set up?
Yeah. I just get on Google Maps. I
Yep.
figure out which asset class is
Mhm.
the simplest to understand.
Yep.
And I would type in the name of that,
Mhm.
RV parks,
Yep.
and I would do a call campaign. Do it in the morning, 7 to
Mhm.
9 a.m. is when you're most likely going to get the owner to answer
Mhm.
the phone,
Yeah.
and ask them what their plans are. If
Yeah.
they're going to roll into the next one, 1031, it's not for you. They're going to
Mhm.
retire.
Yeah.
Start talking about that
Mhm.
and close. Use the money you have for the down payment. It's going to be
Mhm.
small,
Yeah.
and 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 close the thing. Start making payments and take that cash flow.
Yeah. What I like to do is give them a couple of different offers. I'll give them a low cash offer. I'll give them a high purchase price with no money down. And then I'll give them something in the middle, right? Maybe 80% of what my high offer would be with, 5 or 10%, something like that. And then you see, really what they want to do because now they've got 3 offers. And psychologically, there's something about the number 3 where they feel like they have to pick one. And just gives them some options, right? Because you never know. And this is, I think, the most important thing that we need to leave people with is you never know what somebody else's situation is. And we can't project our own feelings or our own shit in our head onto other people, right? Sometimes I just want to retire, like you said, and go sit on a cruise ship.
That's exactly it. And we actually use a 3 offer LOI for that
Yeah,
reason.
that's
You know,
exactly what we've been doing for forever. So, all right, Brad, thank you so much, man. Last question: how are the hounds? How's your pup?
oh, he's amazing. He's
Yeah,
cuter every day. Bulldog named Indiana Banana. Can't get enough of him.
I was gone for 8 days, and I didn't know my assistant brought my dogs back last night, so I got home at like, I don't know, 8:15, 8:30, and walked in, flipped on the light, and there were 2 heads just sitting there, and I was so happy. It was great to be home and have my dogs back after so long.
That's
So
awesome.
cool, my friend. Good to talk to you again. Hopefully we can do it again soon. There's so much good stuff going on in the market, and there's so much opportunity for all of you out there. So make sure you like, follow, subscribe, do all of the things. Brad, thank you so much for being on the Closers Club.